Well, it finally makes sense, people. Finally, a valuation that makes sense to probably more people out there. Yet the problem is, we aren't seeing that many more actually buying the stock. Now, why is that? That is what we're going to talk about here on the PlantStock channel today. But also talk a little about that there's some new products out there and some other things also that is related to the very good food company, Very My Berry. Guys, before we do that, as always, I would appreciate an early thumbs up to help spread the video to more people out there. And if you are interested in plant-based companies like Beyond Meat, Oatly, the very good food company, or Tattoo Chef, to name a few, make sure to subscribe and don't forget that bell button. Well, we know there's been a lot of negativity regarding the company as of late, and we have heard very little information from them. But the good thing is that we finally got some news regarding is that they have actually held up what they've said, that they are coming out with new products in their Butcher Select line of plant-based meat alternatives. So they came out with 3 new products, and one of them is a cut above pork. So some form of plant-based pork then, which is interesting. And I think that's products that you probably use to do different classical Chinese cuisines or whatever kinds of products you would want to make, right? That's kind of pork related. I'm wondering if you can make a Greek gyros. That's interesting. And considering, I find it interesting that we knew from about 4 or 5 months ago that they were talking about making some kind of move on China, selling some kinds of products there. Having a pork related product would be really interesting in China. And then they have another product called a cut above beef. I'm guessing some form of more luxurious beef item. And then another one, another meatballs, but these are more Italian style, spicy meatballs, right? When you look at the products lines here, we've talked about before, it's maybe not as healthy as their original line, not as whole foods. Here you see water, pea protein, organic sunflower oil, yellow split peas, coconut oil, cocoa butter, not whole foods products, right? But some of them are, and still not the worst if you compare them to a lot of other plant-based products out there. I will say, however, when I actually got those links in my free Discord channel, and guys, if you want to be part of the free Discord channel where we talk about this company and other plant-based companies, obviously take a look in the description. I got the links there, but it only seems to be in the US shop as of yet, on the net anyways. And actually when you go back here, you can't find them. So might be a while before they actually come out there. But guys, let me know down in the description if you've ever tried one of these Butcher Select products. What do they taste like? I'm really interested to hear. But I also found out some information regarding that when it comes to the Butcher Select, that some of their products not long ago was actually priced at around 11 Canadian dollars. But as you can see, some of them now are up to $13.49, right? So the question is that a negative thing? And actually, we had a really interesting talk about that in my Discord, where Karim C, that's normally talks a lot here when it comes to the very good food company, he had some really interesting things to say. So what he basically says is that there are 4 reasons, according to him, why a price increase would actually occur. And here, number 1, demand is too high for a product. And we know that's been the case many times with the very good food company, that they haven't been able to produce enough to actually meet sales. The only thing I wonder about that is that when I'm in their original page now, it says free shipping on orders over $75. It used to say before that it would take, I don't know, 2 to 3 to 5 to 6 weeks before they actually could meet the demand. We haven't seen that now. If that, hopefully that's a good sign, meaning that their different facilities are up to date now and they're able to produce as much as people need. So, but that could still, I could agree with Karim here. That could be one of the reasons, right? The second here, the product got more expensive to make, right? Veggies getting more expensive because of inflation. certainly makes true. All companies out there, especially all food companies, have been affected by inflation. Number 3 here, price was not rightly calibrated from the start. Could be the case. And the last here, price was voluntarily lowered to get a broader consumer base. Interesting. That's one way of doing it. We know that Tattoo Chef, when they actually went into new markets, they actually had rebates on their new products. So that is one way of reaching a larger audience for sure. So what I'm trying to say here, folks, is that we don't know if this is good or bad, but I would say I actually don't think it is anything negative. And hopefully it could be a sign that they are selling really well, and they needed to balance that in one way or another. Especially, it could be good from a margins perspective, right? But we'll see more about that. Probably we'll have to wait until Q1, if not Q2, before we see the difference there. And another interesting thing that I found positive right now, even though there's been a lot of negative information and thoughts regarding the company, and that goes for me as well. If we look at the institutions, right now it's up at 1.54%. Now, that might mean nothing if you look at Beyond Meat, which is around 60%, I believe. And I do believe that Tattoo Chef is up over 20%, I think around 23%. But not long ago, this was basically zero. And maybe like 0.3%. So this actually means that institutions are getting more interested in the company. And it's not strange at all, is it? Considering the valuation looks way more attractive. So, but that's also, we're going to talk more about the valuation. So if we take a look at the stock price for VGFC and the NASDAQ, right? It's down to basically $0.5354, right? And it's fallen a lot in the last couple of months, if not the last year or so, actually. And market cap is around $70 million, $67.96 million. And I know a lot of us who have invested at a higher price have been depressed about that. And I went in pretty good. I think American dollars probably around 1.5, 1.6. I thought was pretty good about 1 year and 4 months ago or 5 months ago. But obviously it's down a lot since then. But if you take a look at the price to sales, 7.3. I mean, that's the best we've ever seen with this company. 7.3 for a company that is supposed to be a super growth company, right? We've seen it having numbers at 100, 200, 300% growth. We didn't do that as of late. And hopefully that was related to supply issues and the overall issues on the market that we've had in 2021 and that we saw in Q3. And this is not the only company that had issues with that. So from a perspective, if you think about when this company just, I think about a half a year ago, if not, maybe about a half a year ago, the price to sales was up to about 100. At times, it's been up to 150 to 200, right? Crazy numbers. And now it's down to 7.3. That's basically where Oatly and Beyond Meat is at times right now. So it's looking way more attractive. And even when you think about when it actually IPO'd about 1.5 years ago, I think it was around these prices quite early on. Even when it was 0.25, when it, I think that's what it IPO'd at, and went up quite quickly to about $1. I mean, the price to sales was it must have been around 200 to 300, right? So even though it's down to the same where it was about 1.5 years ago, the price to sales is incredibly way more attractive. So I think that's what we should also consider here. So that is actually a positive thing. It makes way more sense to actually invest now. But obviously, one of the biggest reasons why a lot of us probably wouldn't invest more. I'm still invested, by the way. I haven't sold one share as of yet. But one of the reasons, even if I had money right now, why I wouldn't put more money in it right now, and that's not financial advice, is that we are getting nothing from the management, right? Because we know back, I think it was in October, we found out that the CEO and the co-founder here, they basically made up a deal between each other regarding a house loan, which they actually took on their stocks, right? That has to do with investors then. And it was supposed to be paid back in December. And I think there was an option that it could be paid back in January. But we've heard nothing as of yet. So, I mean, I would imagine if they would have paid back, we would have gotten to know that quite quickly, right? Yet we haven't gotten any information about that. And that kind of gives us a shady perspective. And then about 5 weeks ago, the company came out with information regarding that NASDAQ might actually delist them because one of the requirements is $1, and it's basically half of that now. That's 5 weeks ago, and since then, it hasn't gone up more, right? It's basically gone down between 15 to 20%. And we're still not getting more information from the management. I mean, if they really cared about their investors, right? If they're taking this serious, they would actually come out and tell us what they're trying to do, but we're not getting more information about that. And then the whole thing about the company actually making a stock dilution just after they basically got listed on the NASDAQ, right? When the price was really down. A lot of us are wondering, why didn't they make a dilution when they were up about 7 to 9 Canadian dollars? That would have been a good choice, but they did it when it was already down a lot, which makes it seem that they're not very competent as management, right? And the whole promise that they were going to be around 3,000 stores before the end of the year in 2021. And I think we're up around 1,500 to 1,600 stores, right? So there's still a lot to go there. So kind of too many promises and too little information. There don't seem to be upfront. And I think that is one of the issues why we're not seeing more people buying in right now. So the thing is, on paper, the valuation looks way more attractive for a growth company in this sector, in the plant-based sector. But we need more information what's going on, right? We need to see more numbers and revenue. We're looking forward to the Q4 and 2021 financial results to get more information. So me personally, I would probably wait with doing anything. Again, not financial advice, and just monitor this company really strictly. Because again, this is one of my all-time favorite companies before, right? And my understanding is that they still have solid products. There's a lot of possibilities, but we need to know more about what is going on, and the management need to open up, in my opinion. And it would be really interesting to know what is going on with their Patterson facility, right? And how is it going with the Rupert facility? There's still way too little information regarding this as well. All right, guys, that was it for today. I truly hope you got a lot of value from today's video. And if you did, make sure to smash that like button. And if you want to keep following this company, the Very Good Food Company, but also other plant-based companies like Beyond Meat, Tattoo Chef, and Oatly, of course, then make sure to subscribe and don't forget that bell button and be part of the free Discord channel. All right, guys, don't forget again, this was not financial advice. Always do your own due diligence. All right, see you tomorrow and peace out.